6 assets that can never fail. Even if there's a lockdown across all of India, even if petrol prices across India were to reach 150 rupees per litre, or even if price of the dollar crosses even 100 rupees, basically, regardless even of a weak rupee, whatever the economic situation in India may be, these are exactly 6 assets that can never fail. Well, I'm saying this because these 6 assets have, over the last recorded 50 to 100 years, survived every market crash, regardless of how severe the stock market crash really was. Whether it's an economic problem or an economic crisis in the US or the entire world. But when it comes to these 6 assets, these assets are ones that never lose investors' money. Today, we will discuss them one by one. Let us begin right now. The very first asset is definitely one of the most favorite assets of Indians. And not just recently, but for the past 50 to 100 years or even longer. You know exactly why? Because this specific asset simply never loses its value. I mean, just like the stock market crashes, the value of this asset never crashes. And let me tell you, the richest people in India, whether you are talking about Mukesh Ambani or Ratan Tata or any other big personality, every single one of them has made profits of lakhs and crores from this asset. Whether it's Amitabh Bachchan, Shah Rukh Khan or Salman Khan, each and every one of them has invested a considerable portion of their total wealth in this asset class. And even retail investors just like us can easily invest in these assets. The name of the asset is real estate. You have surely heard of this. Historically, real estate has provided returns ranging from 8 to 15% every single year. See, you get income from real estate in two ways. The first source is rental income, which typically ranges from 2 to 4% in standard residential investment options. In other words, investing 1 lakh rupees in a residential apartment could yield you an annual rental income of 2 to 4,000 rupees. But on the other hand, if you decide to invest in commercial complexes, a retail store, or even a warehouse which is going to be used commercially, then the rental yield can increase significantly. There, on an average, you can get a rental yield of 5 to 7%. Meaning that if you invest 1 lakh rupees in a commercial complex, you will get an annual rental yield of 5 to 7,000 rupees. Apart from this, the capital appreciation is separate because real estate is almost never destroyed. And as the population in India keeps on increasing steadily, the prices of real estate are skyrocketing. It is quite likely you have seen in Mumbai's Worli area that the price of many flats has gone into crores. A single flat went for 130 crore. You know why? Because of that area, the property value and local society cause real estate prices to rise consistently. You might have heard of a village that your grandfather or your great-grandfather bought some land which was worth only 10 or 20,000 and today its value is in lakhs and crores. Yes, in the long term, real estate can give you outstanding returns, no matter how big the crash in the stock market is. No matter how much pressure there is on the Indian economy, real estate never loses all of its value. The value of real estate might fluctuate a little bit, but the fact is it never loses its value. The price might go up and down a bit, but it never becomes zero. But you'll say that you need lakhs of rupees to invest in real estate. But don't worry, because today I'm going to tell you about a system through which you can invest in real estate for just 500 rupees. Furthermore, you can also earn steady rental income every month. That's because SEBI has officially opened up the option of real estate investment trusts for retail investors like you and me. In this, you can buy units of a real estate investment trust, just like shares. These are listed on stock exchanges and their price is around 400 to 500 rupees per unit. And the return you get from it is almost a rental yield of 5 to 6% and a capital appreciation of 4 to 5%. Meaning, on an average, you can make an annual yield of 10 to 12%. In this video, I have shared full details on every major rate that is listed in India, the rental yield they offer, and I've also explained how to invest in them. Using this approach, you can invest in some of India's biggest commercial complexes starting at 500 rupees. Furthermore, you are able to earn a steady rental yield of 5 to 6%. Registration is completely simple, nor will you need lakhs of rupees to invest here. And you won't have to follow any lengthy process either. You can quite simply purchase these rates from your personal demat account and invest in them. The second asset, which is a massive favorite of every Indian housewife, you must have already guessed it. This is an asset class that, if you look at the historical data for the last 10 years, has given CAGR return of about 18.5%. The reason for this is clear. Over 5 years, this asset class has delivered CAGR of 26.2%. Meaning, while the equity markets haven't been performing for the last 2 years, this asset class has given you outstanding returns. You all must have already guessed the asset class. Its name is gold. Gold prices were at this level in 2004. Look, on the screen, you can see the last 20 years of gold price movements, and this very detailed chart will effectively demonstrate to all of you that no matter what the situation was in India, it is evident that regardless of how significant a stock market crash becomes, gold maintains its value. Even today, when the stock markets haven't been performing for the last 1.5 to 2 years, gold is still trading near its lifetime high. There are a lot of ways to invest in gold, And there's one such way where you can invest in 24 karat gold with just 100 rupees. Yes, with just 100 rupees. And that is by using a SEBI regulated mechanism. I'm not talking about something illegal or any Ponzi scheme, but rather an approved method through which you may invest in gold with 100 rupees using proper SEBI regulated mode. Now, as the value of gold increases, the value of your invested 100 rupees will also increase. From 100 rupees to 110, 120, and eventually 200 in the long term. So, gold is an asset that has always maintained its value even during every economic problem. In this video, I have explained in detail the entire system of investing in gold with just 100 rupees. Do check it out. The third asset class that can never fail, even if the entire stock market completely crashes, is government and RBI bonds. See, the return you usually get from government and RBI bonds is in the range of 7 to 8%. Currently, the RBI floating rate bonds offer a return of 8.05%. Similarly, on 10-year government bonds, you are getting a yield of 7.1% as of today. The minimum investment here is 1000 rupees. And the tenure can be from 3 months to 7 years based on your preferences. Coming to our next asset class. The fourth asset that never fails is infrastructure assets, such as roads and highways, power and energy assets, water and utilities, telecom, 5G, etc. Admittedly, these assets may sound like investments that you are unable to make. Understand one thing, roads as an asset can never end. The value of a highway can never end. Power and energy sectors also possess investment assets like electricity grids and solar and wind assets, whose value is steadily increasing day by day. Now you'll ask, how can we invest in such infrastructure assets? The method is quite simple and straightforward. As a retail investor, you can invest in InvITs, which are SEBI regulated trust, owning and operating infrastructure assets. Meaning, just as a real estate investment, trust owns real estate assets. Similarly, InvITs basically own the infrastructure assets. And do note that this is also a 100% SEBI regulated investment option, providing a pathway where retail investors like you and me can start investing with 100 rupees. In this specific video, I have covered multiple different InvITs whose dividend yield is as high as 14%. Meaning, if you invest 1 lakh rupees, you are able to get an annual distribution of about 14,000 rupees. Yes, you heard that right. No normal stock gives such a high dividend. But InvITs, which own infrastructure assets, have a very high distribution yield. In this video, I have covered multiple InvITs whose distribution yield is in the range of 13 to 14%. I've also put the link to this video in the description. Do check it out after this video ends. Now let's talk about the fifth asset. The asset that never loses its value, but rather increases its value day by day, is human capital. Look, no matter what problems arise in India or the whole world, the value of human capital and human intelligence can never decrease. No matter how much AI advances, it will never be able to replace certain types of humans. There are a number of creative and mindful jobs whose value continues to increase with each passing day. And when I specifically talk about human capital, I am actually referring to your personal skills. You see, the more skills you have, the more your earning power will increase. This gives you the highest ROI. Quite often, you must have observed that a person completes a big course worth 1 lakh rupees, significantly upgrades their skills, and then lands a job paying 1 lakh rupees a month, proving the return on this investment is truly the highest. If you have the right skills, you can get the biggest jobs and the biggest projects, through which you can earn lakhs and crores of rupees. So this is an asset that never lets its value decrease, but rather increases its value day by day. The last asset is cash and cash equivalents. You're likely wondering what kind of asset cash is. Look, and remember that whenever you face an emergency, none of your other assets will be as useful as cash. Why? For example, if I have a medical emergency and my stocks are down by 20 to 30%, I won't be able to withdraw money from them in an emergency. That's why there is a golden rule. It simply means that you should always keep enough cash on hand to cover the equivalent of 6 months of your total monthly expenses, just to be safe. This really helps you during a medical emergency. It also helps if you suddenly lose your current job. Sometimes, vehicle or home repairs come up urgently. For example, your car gets hit, or you have a minor accident in which your car or some other vehicle gets damaged. Then this money helps to get it repaired. Sometimes, you may have emergency family obligations. Sometimes you might have to pay fees, like your children's school fees, or there could be other similar expenses that you might always have to pay in cash. So cash comes in handy as an emergency fund. I am not saying that you should keep cash, meaning hard cash, in your locker. No. Safety is also a major concern there, and due to inflation, the total value of your money also decreases. You can do one simple thing instead. Invest your extra cash in a place where you can get a return of 7 to 8%. How exactly will this happen for you? With complete safety, it is simple. Leaving money in a savings account only earns you 2 to 4% return. Fixed deposits and liquid mutual funds both provide returns of 6.5 to 7.5% as a more profitable alternative. Treasury bills issued by the RBI offer you a yield of 6 to 7%. If you put money in RBI floating bonds, you get a return of 8.05%. But there's a problem. However, liquidity is low because the maturity is 7 years. If you park money in overnight mutual funds, you get a return of 6.5 to 7%. Now, among all these, the best option is a fixed deposit. Why? Because in a fixed deposit, money up to 5 lakh rupees is always secured. There is a DICGC guarantee that even if the bank fails, you will still get your money back. So this really gives you 100% safety. But you should definitely keep this money in a bank where you can get slightly higher returns. SBI, HDFC, and ICICI banks offer 6 to 7% returns. But small finance banks can pay you a higher return of up to 8.5% per annum on your FDs. On top of that, there's a guaranteed insurance of up to 5 lakh rupees from the RBI, which you get through DICGC. This means your invested money is 100% safe, and you will also get a return of up to 8.5%. These are indeed the 6 primary investment assets that truly never lose their value. Whether the stock market is currently up or down, no matter how big an economic problem arises in India, these specific financial assets will never lose their true value. We'll meet again with another interesting video like this.